Hello and welcome back to another episode of Southbank Live, episode 35 of the show, where we discuss the latest market movements and market events and discuss some of the headlines in the news that may be affecting investors around the world today. Now, it's been a very, very eventful couple of weeks, as I'm sure you can all sympathize with all manner of things that we can discuss tonight. But this show in particular, we shall be taking an especially sharp focus on commodities in general. But anyway, if anyone who is new to the show, the rules of the game are you can ask any questions that you would like or give any commentary that you would like in the live chat box beside the screen. And indeed, if you're watching a recording of this, if there's anything you would like us to cover in a future show, do feel free to leave that as a comment below this video. Now, my name is Boaz, Shoshan, as ever, and I'm joined once again by John Butler. John, how are you getting on this evening?
Very well, thank you.
It's quite a time to be an investor. I mean, there's so many ways you could describe it, John, but it's been such a crazy couple of weeks. What are your general?
To paraphrase the Chinese, right? May you invest during interesting times. I mean, it's an interesting time to be alive, but that has a dark side, right? There's a lot going on right now, which is probably dark stuff. It's not nice. Nothing's good about it. But we have to be realistic as investors, right? And we have to try to think through how best to navigate this.
Yeah, indeed. There's so many different sort of balls in the air, as it were. It's hard to keep track of them. And I have actually received a couple of long questions from viewers that we can discuss later on in the show. I think a lot of ways that we could kick things off. I think commodities, the action in commodities, as they are such a basic input to all of the things that we do here in the developed world and indeed through most of the world, it would be good to just take a look at what's been going on in the commodity space just over the past week. We do have a few headlines that I'd like to dwell on. This is just looking at oil. So we've got these Russian tankers at sea and they don't know where they're going to deliver all the oil to. So despite the fact that oil is blowing the lights out, because Russia has been sanctioned, they can't do it. Palladium, because Russia supplies so much palladium to the world, the price of it has been going up an awful lot. And indeed, we've seen an enormous surge in nickel this week. So trading was actually halted, I believe, in the London Metals Exchange because the price of nickel was blowing the lights out. It's been pretty crazy to see all of this action occur in such a short space of time, John. Just starting off with oil, we're still seeing very elevated prices. It has eased off a little bit. What's your take on what's going on there? Do you think this is something that's going to persist for the rest of the year?
Well, it's going to persist as long as the tension is as high as it is. And I think perhaps one reason why oil has continued to press higher and higher almost every single day. It did take a brief break yesterday, as I recall, but the fact is that I think people, and that includes me, kind of thought this would be over pretty quickly. And in certain ways, it is over. And we can get into that here in a few minutes. But in other ways, it's not. And it might even be looking scarier now than it was a week ago in certain respects. And I suspect the oil market is reacting to that. That level of concern that this is not perhaps going to be a quick and isolated and easily containable conflict. That's my best guess. And that I think also helps to explain why certain other commodity prices have really spiked, including the basic foodstuffs, right? The big grains.
Quite. Could you expand a little on what you mean by it being even more dangerous now than it was a week ago?
Well, I think there were some initial efforts following. Look. Once Russia decided to invade, obviously they weren't going to just stop on a dime. They were definitely going to try and achieve a good handful of key objectives quickly, and those were, it appears. Again, I don't have detailed information. It's very hard to get a real, useful, clearly truthful information out of a war zone, but it looks like they did achieve a series of what for them were important military objectives. The problem is this, they clearly have been trying to get Ukraine and NATO more generally to the negotiating table. And so far, those efforts have not worked. And so now you're in this sort of weird stalemate where Russia clearly has the upper hand militarily. Everyone knows that. It's not, notwithstanding some propaganda around the edges, I think it's pretty clear they have the upper hand militarily. but they haven't managed to get Ukraine to the negotiating table to the point where they're negotiating in what I would call good faith. I think that Ukraine is still helping to draw NATO into the fight, and Russia is still hoping that they can settle this without NATO being drawn into the fight. But that hasn't happened yet. And indeed, there are some signs that NATO is actually preparing for a fight, which concern me a lot. And so I do think that that's spooking the market somewhat.
When you're looking at the conflict, because there is, of course, propaganda on both sides. Everyone thinks they are immune to propaganda, and we think we don't. People like to think that we don't really do it here in the West, but we obviously do. In terms of some of the general realities you think are taking place with the Russia-Ukraine conflict, like where do we actually stand?
Look, again, it is hard to know. All I can say is that from what I can see, and I check things across multiple sources, I follow both believe it or not, I even follow some pro-Russia websites because I at least want to know what their perspective is, however misguided it might be, because maybe there is a sliver of truth in it, right? And I want to see I want to see where there might actually be points of agreement between the stuff coming from NATO in the West and the stuff coming from Russia. And it does, again, there's not a whole lot that I can say with certainty. It does appear that Russia has achieved an important series of initial military objectives. They've encircled most of the key cities. The only ones they've chosen to actually go into, it seems to me, are ones that are actually of themselves, in a way, they're military targets because they're choke points. They're logistical choke points. And it appears to me that what Russia's trying to do is they're trying to be in a position to basically shut the country down without having to fight it out. That is, if you surround all the power plants, you can turn off the power. If you surround all the water pumping stations, you can turn off the water. If you control all the major motorways and larger roads, you can shut down the transportation of HGVs or any large transportation vehicles. And you therefore can try to avoid direct military engagements. I think that's what they're setting up to do. If they simply wanted to take over the whole country, they would have done things differently, in my opinion. So that's my take on it. Again, I'm not an expert, and even if you are an expert, it's so difficult to get high quality information out of a war zone. I'm not sure, garbage in, garbage out, right? Even if you're an expert.
Quite. I mean, there are a lot of people who were taken completely off guard by the invasion itself. I think it was the former chief of MI6 was saying it was completely not on the cards, a full-scale invasion of the kind that Russia has embarked upon. So, understanding sort of not being taken by surprise by the invasion, and indeed not being well, I mean, you say you're not an expert, John, but I think you're being rather too humble there. I mean, you do know an awful lot about the situation. Taking a look at what is going on the ground, it's very hard to parse, especially when you see the narratives, because everyone wants to make their side look good. So you see so many people celebrating the effect of the sanctions on the Russian ruble. You see a lot of cheering on, but when in reality, if all we're managing is economic sanctions and we're not managing any military sanctions, of course, there's lots of fanfare for what little you can do or what non-military means you can take. But in actuality, it's everyone's just going to support whatever because we're doing something rather than what is actually being successful on the ground.
Indeed. And when it comes to the military situation, clearly Russia has the upper hand here. I think that should be obvious. Look, all this talk about the economic sanctions and all this pointing at the ruble exchange rate and all this pointing at credit default swaps, you need, from the perspective of the financialized Western world, from the perspective of the city of London, New York, and so on, those things are very important. From the perspective of Moscow, they may not be that important. Russia has dealt with sanctions in some form ever since 2014, and there's no sign that they really ever had that much of an impact. There are a lot of signs that Russia was surprisingly quick to adapt. and deal with those sanctions. Now, these are at a different level. These are at a much, much bigger level. But you cannot tell me that Putin and his leadership team did not wargame this a lot before this began. And because I assume they suspected NATO would be reluctant, at least initially, to engage militarily, they probably assumed that there would be a very comprehensive set of sanctions put in. I'm sure they've thought this through. And indeed, it was interesting to see earlier this week when NATO announced pretty much a full energy, that is oil, full oil embargo of Russia, but exempted gas transit to Western Europe. Russia said, well, okay, in response to you embargoing our oil, we will indeed begin at some point soon to cut off the gas taps to Europe. And that's tit for tat. The idea that the West and NATO are the only ones in a position to impose sanctions here is actually kind of wrong. Russia holds some cards in the sanctions war also, and they have the military upper hand so far, and indeed without NATO entering the conflict, notwithstanding what I regard as propaganda. I really don't think Ukraine is in a position to stop them being choked off. That doesn't mean, and I'll say this again very clearly, Russia does not have the military strength or the power to completely occupy Ukraine. I don't think they can do it. But if they just want to choke the country's economy by switching off the lights, switching off the water, controlling key roads, especially east of the Dnieper River, that they've already largely accomplished. And I think that they're calculating, and this may be wrong, and this is where I'm concerned, they may be calculating that siege as a virtual siege, because it's not comprehensive, that's enough to get what they want through negotiation. But when NATO starts talking about red lines around chemical and biological weapons, that makes me really nervous because I don't see a reason why that has to happen. Russia already has the military upper hand. Why on earth would they need to start using unconventional weapons? That doesn't make sense to me. And it almost makes me wonder if NATO is laying the groundwork for some excuse, any excuse, to get more involved. And that frightens me a lot.
Yeah, very frightening indeed. It does on the Russian side with the Russian propaganda. I think the White House press secretary was, I think it's Jennifer Psaki was laying, she did quite a long Twitter thread on saying that no, there aren't biological and chemical weapons labs run by the US in Ukraine. This is all complete nonsense. And if you do see any attacks using biological or chemical weapons in Ukraine, then you should know that this was not this was a false flag attack by Russia. The way it was all framed that way, considering the fact that we weren't talking about biological or chemical weapons, does seem quite worrying indeed. I mean, do you think? Well, number one, do you think Russia will be successful in shutting down the logistical choke points of Ukraine? And if so, will that then bring Ukraine to the negotiating table, and then we can start seeing a negotiation to peace?
That is my primary scenario here. That is how I think it's going to play out. However, again, the fact that NATO rhetoric is now shifting to focus on the risk of these unconventional weapons, which is a classic US/NATO red line, that does concern me that NATO is preparing the ground to get involved militarily should it choose to do so, because of course they'll need a justification to do so because Ukraine is not a NATO country. So if you're going to intervene in a non-NATO country, you need some other justification other than Article 5 of the NATO treaty.
Yep.
So that does make me think that NATO is threatening. But again, would they really follow through? Are they in a position to? I don't think they are. And again, I stress this: they're not in a position to intervene militarily in a meaningful way as they move past the Dnieper River. West of the Dnieper River on the Polish border, NATO can put up a hell of a fight. Absolutely. Absolutely. But in the area around the river, and that includes Kiev itself, and it includes that whole line down towards Crimea, which is a military fortress in Russia's hands, of course. That's where NATO, in conventional terms, they won't be able to do it. Their supply lines will be too long. They can't rely on the U.S. Navy because the Navy's bottled up in the Black Sea and cannot operate in proper blue water fashion, which is the only way in which the U.S. Navy has a clear advantage. In littoral waters, it'll be a fair fight with what Russia has down there. So anyway, I'm still hopeful. The primary scenario is that we will get to the negotiating table before NATO gets any more military involved than they already are, which is supplying some anti-tank weapons to Ukraine to at least try to make it a slightly fairer fight. Right. That's what I think is currently going on.
Yeah, before we shift slightly to the less optimistic scenarios going forth, a good evening to everybody who is watching this live. It is great to do these as live shows, so we get a lot more interaction. There are quite a few questions in the chat, which we shall get to. Good evening to Andrew, AJ, and Natalia, and to Liam as well. It is good to see everybody here. Some familiar faces as well. Just before we start going on to some questions, John. So there's maybe the possibility that we would see a NATO country invading another country in order to prevent or acquire WMDs, ultimately, which may or may not exist. I feel like we may have seen this story before.
Well, yes, obviously the parallel with Syria is concerning because to this day, the evidence that was used to try and demonstrate that Assad was clearly behind that alleged chemical attack. I believe it was in Aleppo or near Aleppo, somewhere up that way. To this day, the experts disagree about the quality and the provenance of that data, and yet the U.S. did respond militarily, and so the U.S. does have a track record of responding militarily before it's 100% sure what's really going on the ground, and so if you get into a situation like that here, where it's not entirely clear what's going on the ground, because after all, it's a war zone. And yet the US/NATO response is a knee-jerk military response that properly draws them into the conflict. Now, that's bad. I mean, that's potentially very, very bad. Now, don't get me wrong. If NATO truly had high-quality evidence of outstanding provenance, then hey, then at that point, at least whatever decision they make is well grounded. I'm just concerned that there is a track record here of decisions being made that were not particularly well grounded, and it's not just the Syria chemical attack; it's the whole Iraq War, of course, if you go back far enough, right? And I think Russia knows that, right? They know that. They study their history. They're well aware of how the U.S. and the U.S.'s allies built up the case for what's going on in those previous situations, and so they're probably aware that the U.S. potentially might be playing that card in this, and I really hope we don't go there. To me, that's really not. That's going to make it much more difficult to resolve this situation.
Yeah, I think we're all in the same boat when we hope there is not the use of biological or chemical weapons, or indeed the alleged use, which then leads to another major invasion, especially because in what would bring NATO into direct conflict with Russia. Not a good situation, because then nukes, of course, they get onto the table. But
that's the thing, right? That we can't lose sight of the fact that when it comes to central and eastern Ukraine, that is from the Dnieper River on east, NATO has no good conventional military options. They really don't. And so when NATO gets involved, it's almost guaranteed that we're going to start seeing at least some form of unconventional warfare. And that is frightening stuff.
Yeah, very frightening indeed. One does wonder what unconventional option they may look for. I mean, we saw Hillary Clinton on TV the other day saying that we need to follow, we need to effectively fund an insurgency, making a direct comparison to funding what became Al Qaeda ultimately in the 1980s. But she was putting it in a positive light, saying, this was really good at booting out the Soviets. We gave all of these arms to these insurgents, and that they all those Stinger missiles, they kicked the Soviets out of the country pretty quickly, and giving not mentioning at all what happened maybe a couple of decades later, where actually giving all of these arms to these insurgents ended up being kind of a problem for the United States. So one does hope that the unconventional war we are thinking of doesn't occur. But of course, if you are an investor, you do need to be prepared for any of these, because it's not like it's completely off the table at all when you're hearing the White House press secretary talk about upcoming false flags that we need to be aware of. There was one question here which I think we could tie in. This is from Liam. Evening, John and Boaz. Good evening, Liam. Russia only export oil, gas, and wheat. If we ban all the exports and squeeze the ruble, they are stuffed. Interest rates in Russia rose to 30% last week. They're already panicking. Now, this goes back to what I was mentioning earlier, when everybody cheers on sanctions in these Western nations where there aren't any military options, and everyone who is involved in sanctions wants to make it look like these sanctions are, they're fighting the war for us. When in actuality, Russia has quite a few cards up its sleeve, and while the ruble can collapse, you can't print commodities, and Russia has just a huge wealth of commodities that the world really relies on. So that palladium article that we dwelled on earlier, where we've seen the price of this stuff go, I think it's all-time highs we've managed to get to with palladium now, is quite extraordinary. And palladium is used for all of the green things that we want to see happening in the future that everyone was so optimistic about until this invasion occurred, and indeed which people continue to be optimistic about, and indeed with nickel, which is even more prevalent and used in pretty much everything, especially in things like stainless steel. John, what would be your response here? Because if we ban Russia only export oil, gas, and wheat, they do export a lot more than that, Liam. And if you just ban all of their exports, I think they'll be able to find plenty of other people to export to who aren't in such a position that we are here in the West. India and China being two key figures there, both of them very interested in energy and food. What would be your response, John? Because I don't see how, if further bans on exports are actually going to solve the war.
Well, I don't think they will either, because I think that when you decide to solve something by military means, and you've war gamed it, presumably you kind of know you're going to end up under sanctions. So I think Russia's prepared for this. That doesn't mean it doesn't hurt. It hurts a lot. But of course, the sanctions are also going to hurt the West. The West needs the oil. The West needs the gas. The West needs the grains. The West needs the metals. The West needs all this stuff. And look where inflation already is. Look where it might be going. And that to me, I mean, I hate to say this, but beyond a certain point, this rhetoric that we've seen from several politicians recently, like, what's a few more pence at the pump to pay as the price for freedom? Beyond a certain point, that few pence becomes a political issue, a domestic political issue. And it's going to become more and more difficult to continue running with these, sanctions as inflation continues to creep higher. Now, they might try to stem the rise of inflation with price controls. That's also being talked about. I've read several articles over the past week talking about the possible, supposedly temporary imposition of price controls.
Happy days.
But then the store shelves go bare. When you start imposing price controls, that's when you go to the market and there's nothing there that you want to buy at any price. And that's not politically very palatable either. So this is where we might be going. There's a lot of pipeline data now in commodity prices, producer prices, and of course, already known realized consumer price inflation being at roughly 40-year highs. There's a lot of data out there now showing us where this is going. And the longer that Russia can't export, and the longer that Ukraine can't export, let's not forget Ukraine. Do you think anything is coming out of Ukraine right now other than refugees, sadly? No. And so that's a huge, huge combined negative supply shock for the global economy. It's going to push up inflation. It's going to push down growth. We're already in a recession, in my opinion. I said that last Tuesday on the show. I'm more convinced that's correct. It hasn't shown up in the official data, but it's not going to take too long. Too much damage has already been done. And if this continues on for months, it is going to be absolutely horrific everywhere. There is no place that will have been able to feel that it's escaped a really seriously negative economic impact from this conflict. So the idea that the sanctions primarily hurt Russia, no, they hurt Russia for sure. But primarily, I think it's a much more difficult case to make. And when it comes to the politics, what will shift the politics more? What's already happening in Russia, or what will be happening in the West when petrol is 2 pounds a liter or more, and when the shop shelves start to go bare? It'll be. I hope we don't go there, but sadly, that's the course we're currently on.
Certainly. When we're talking about the war games that Putin must have ran prior to the invasion, I mean the ban on oil exports and the huge chorus for further bans on Russian goods, that must have been part of what he was expecting, and
I'm
indeed.
sure that
But
can't be a surprise. No way.
of course, but longer term, I mean, this is part of the strategy, because you end up stoking domestic unrest in all of the countries that are doing this to you, because Putin is well aware of how reliant the world is on the commodities that Russia and Ukraine export. Because this bit then becomes a destabilizing force. I mean, if we do actually have widespread food shortages, if we do have widespread fuel shortages, and not to mention the incredible, economically damaging costs of very high fuel prices. You see in the States where a lot of folks who are living paycheck to paycheck, who are not earning huge amounts of money, being looked down upon by celebrities saying, this is part of your patriotic donation in the fight for freedom. If you can't actually afford, if going to work is no longer feasible, it doesn't make sense to go to a job that's not paying you a huge amount because you're spending so much on fuel just in order to get there. This does huge damage to the body politic in the States. It does huge damage to the general environment, and that has to have been part of Putin's wargaming strategy, I would have thought. Would you agree?
I suspect that is the case. I suspect this is what Putin believes. He may be wrong, but I suspect this is what he and his leadership believe. They believe that the effect of the sanctions on Russia, while very significant, will not fundamentally upset the politics. That is, that Russians, as a general rule, support defending Russians in eastern Ukraine and taking military action in order to do so. I believe that's what Putin believes, okay, that he will still have public support for this, even if it drags on for a while. Whereas in the West, I think Putin calculates that, as you say, the political situation will shift very dramatically. Wait a few months under really tough economic conditions, and it will influence the November elections in the United States. It will influence other upcoming elections in other NATO countries. And it probably might even begin to lead to certain forms of social unrest in some countries. And that, of course, will also make this more difficult. And I mean, think about it. Not that it will be presented in this way by the mainstream media, probably, but it will kind of trickle through to the general public over the coming months, assuming we're stuck in this situation, that really the cost of this war economically is much, much, much higher than they were led to believe. And that kind of leads to a general distrust of politicians. And anyway, I think the potential for negative political repercussions in the NATO countries is much greater than in Russia. That's my opinion, and I believe that's probably the way Putin's thinking about it.
With that in mind, what do you think would be, say, for example, that hypothetical does play out exactly as you describe? What would be the best way to be positioned as an investor? Because when things like price controls get thrown around, the estimating profit and loss becomes a lot harder for companies because some of them get coerced into what the state wants, and it doesn't end up being profitable for them, even if they're heavily involved in the creation and the distribution of various products.
It's a real mess. It's a real mess. And what happens is this, okay? So the price of the raw commodity goes up, 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 but you get into a situation where you can't pass it on. And as a result, you only produce as much as you can produce profitably. And maybe that means you can only produce 80% of what you normally produce. And so the other 20% just gets unproduced. that doesn't stop the commodities themselves from rising in price in the first place. That is the first order effect. The second order effect is the margin squeeze and revenue drop that causes as you move through the value add chain, right? From raw grains being grown somewhere to the loaf of bread that you're actually purchasing in the market, or the sandwich you're buying at the shop, or whatever it is. Okay. So somewhere in there, these price controls are going to squeeze it, and they're going to reduce it. And that's going to lead to a general decline in overall economic value added and associated corporate profitability. So you want to do what I believe I also have mentioned a couple times on recent appearances here. You want to invest low on the value chain, not high on the value chain. You want to get into the raw commodities, the rawest stages of processing, absolutely essential industrial commodities, things like fertilizer, without which none of the further value add can even take place. That's where some pricing power will still remain, but you're not going to see it remain as much as you move up that value chain. So that, to me, it's not only a traditional defensive strategy, that sort of strategy, but it's a defensive strategy that's particularly well suited for this sort of negative supply shock, stagflationary environment. And also think about this. What about firms that specialize in things like waste recycling? What about firms that specialize in squeezing out efficiencies when it comes to physical goods, prolonging their lifespan, improving maintenance, making do with what you have, reusing what you have is really going to be in demand. So to the extent you can find sectors that in the industries for companies that specialize in those sectors of in these industries, that's kind of where you want to hide and be defensive for now.
Say, for example, that we do get, Ukraine does come to the negotiating table, NATO comes to the negotiating table, and we do see a peace take place. Now, of course, whatever gets negotiated will be key to whatever happens next. But in the event that there is an end to the conflict and there's an easing somewhat of the tensions, what do you think happens, John? Do you think these commodity prices, they go down, but they're still more elevated than they used to be? Have we sort of broken through into a new era or a new sort of epoch for commodities and inflation, regardless of what happens, even if peace is secured quite quickly?
No, I think we have actually, and the reason why is this: is that a lot of damage has already been done. Damage has been done. It's been done to trust. It's been done to perceptions of stability. It's been done to reliance on globalized, just-in-time inventory chains, inventory and supply chains, all that stuff. We can't just go back to that. Too many companies are going to face too many difficulties and too many hardships as a result of this, trying to maintain their operations, maintain their profitability, and they're going to demand more safeguards in future, more redundancy, more backup, more capacity, more flexibility, more options. All of that compromises the just-in-time global supply chain inventory and efficiency that we have. Basically, we've become so accustomed to it pre-COVID, I should stress. We became so just used to that, adjusted to that we couldn't really see the possibility that things would go into reverse. They have now gone into reverse. They went into reverse because of COVID. Now they're going into reverse because of this conflict. And the sanctions that are being used here are also waking people up to just how tenuous some of the assumptions, even regarding cross-border capital flows as well as good flows, are. And I think the impact will be pretty profound, and it will last for a long time. So while yes, I would love for peace to break out tomorrow, I'd love for everyone to go to the negotiating table and sort this out in good faith. And yes, if that happens, commodity prices will start to decline again. Absolutely. Stock markets, hopefully, in that scenario, would recover a bit of their recent losses. But the risk premia embedded in stock market valuations, in corporate debt valuations, and the need to build more robust logistical infrastructure to be prepared for something similar in future. All of that is going to be what I call semi-permanent. It means it doesn't last forever, but it lasts long enough that it will remain on every investor's time horizon for an unforeseeable amount of time.
Yeah, quite. It does feel like we're now in a. It's only been 2 weeks, and it already feels like we've been here for quite a while. Nobody is referring to COVID-19. No one seems to be minding about it. It's all been forgotten about, put under the carpet. There
But
was
it was already, but this is the thing, right? In a way, it was a trial run. I don't want to belittle what's happening here, but in a way, COVID was a trial run of what a big negative supply shock looks like in our modern, just in time inventory, globalized world. And now we're getting a double whammy. Yes, fine. COVID is finally, clearing up and whatnot, and governments are relaxing all the restrictions and all that. But we haven't truly sorted out all the logistical hangover from that, right? We haven't. Absolutely not. And bam, now we have this big conflict, which is compromising the supply of essential commodities from a very substantial chunk of the world. And so that really is going to take something which was already nonlinear to begin with and make it even more nonlinear. And prices are set at the margin. Corporate decisions regarding how you manage inventory, how you manage your operations, these things are done dynamically at the margin. And I just can't believe for a moment how unbelievably complicated this is and how difficult it is going to be to sort out the damage that has already been done. I think we're going to see surprise after surprise after surprise to the downside for almost every measure of corporate health, growth, profitability, you name it, for probably at least a year from now, even if things begin to settle down now.
Yeah, and if they get worse, we won't even be
Yeah.
thinking about those things because there'll be even further problems. They're probably going to be even worse in by 12 months' time. There is a couple of questions here we get. This is from Andrew, who asks if we're taking our eye off China during this big conflict, and indeed from Eric, who says, "I think China is in a prime position in the financial markets during this crisis. Any comments, please?" Very good questions to you both. Yeah, John, you mentioned in a previous episode, if you were China, what you'd want best would be for NATO and for Russia to just slug it out and destroy their own economies and cause all of this, cause chaos, while you just carry on growing, strengthening, arming yourself and getting ready to be the preeminent superpower that was promised by so many folks. What's your take on where China is in this, and especially on the stock market and the bond market side? Because over the COVID period, we did see China attract a very large amount of capital due to high yielding bonds and some very interesting action in the stock market. So could it be that China, as you described, sort of making the best out of the old Western powers and the remains of the Soviet Union, slugging it out? Do you think they're going to come out on top? And if so, is it a good place to be as an investor?
Well, look, I mean, it's easier said than done for China to sit this one out. They are the world's largest oil importer, and you can imagine how unbelievably highly impacted they're going to be by this huge spike in the oil price. Now, that said, you could say they stockpiled a bit and whatnot, but the cost of stockpiling oil is actually extremely high. China's capacity to do so is low relative to its needs. So they really do need to source their oil continuously on the open market. And when the price of doing that spikes to the extent it has, it's going to affect them a lot. So it's again, on the one hand, they would love to just see, in my opinion, the U.S. and Russia duke it out a bit, and then they can emerge the most powerful country in the world almost by default. But it's not that easy. It's not really that easy. And so China's got a difficult game to play. So I suspect what their preferred outcome here is that, in fact, things don't drag on too long enough to seriously weaken the United States and NATO, perhaps, but not long enough that the impact felt at home in China is so large that it changes in any way their domestic political situation, right? Enough of China still lives at a level which is, let's face it, right, where food and basic necessities still comprise a huge portion of the median household budget. And the longer those sorts of food and basic necessities prices remain elevated as a result of this sort of conflict, the more the Chinese leadership is going to be concerned. So I suspect they're hoping for something. And I'm not saying China wanted this to happen. I'm just saying that they can see a silver lining to it in a way that other countries perhaps can't. But now that it's broken out, I think they would prefer it not drag on for too long for their own domestic considerations.
There was a term that was used to describe how the British Empire, in its sort of during its heyday, used when it was dealing with other powers around the world, called transactionalism, where it was never about long-lasting loyalty to one power or another. It was always about just getting the most of what you can out of one arrangement, and then feeling no guilt whatsoever about betraying it later on if it suited you. I wonder if China finds itself in a similar position where it could be a broker that manages to facilitate peace between Russia and the West.
Maybe, and maybe that's what one of the keys to solving this conflict is for China to, make some strategically placed phone calls. I mean, look, there's that famous saying that when it comes to international politics or international relations, there are no permanent friends, only permanent interests. Right? The players in the game, they have interests, and those interests remain their core national interests, and they don't really change very much. But the friends, they can change a lot depending on which group of friends best serves your interests at any given point in time. And certainly China faces a very different strategic situation today than they did a generation ago. And to their credit, they've come a long way, is kind of what I'm saying. And so yes, they may now see themselves in a unique position of being able to broker a deal, or at least contribute to brokering a deal, which is to their own benefit in some, if not direct, at least indirect way.
Yeah, it does feel like China is actually in kind of a good situation when it comes to the oil side. As you say, they are an enormous consumer of oil, and China doesn't seem to mind taking Russian oil. So you've got all this Russian oil that's going around at a discount to the very, very high oil prices that exist, and China can just hoover up a huge amount of it if it wants it, because China doesn't have the same qualms about accepting Russian energy that the rest of the West does. Now, there are a couple of questions here about gold. One of these was actually sent in by a reader. I'll just see if I can get it up. This was regarding what the role gold plays in a crisis and whether or not it really does what it's meant to do. This came from Carl. Thank you for sending this in, Carl, because it is a very well thought out list or a very well thought out take on your own experience with gold and things like that. So this is just from Carl. Realize you guys must be very busy, but I have a serious question. I have physical gold now for over 10 years. During that time, it's gone up a little and down a lot. I have no yield on it, and I've followed all the received wisdom that gold's a good portfolio insurance. I tell my wife it's to keep our portfolio safe. Moreover, it's supposed to be the asset of last resort. So if World War III kicks off big time, I can drive to Zurich and pick up my 1.5 kilo, I think, gold bars and take it home. However, what if I can't drive to Zurich because there is a world war? How do I spend my 1.5 kilo gold bars? Do I need coins in small denominations? I can't carry 2 gold bars around in a rucksack and pay for goods and services. We had the 2008 crisis and gold hardly moved. We had the pandemic. Surely that's an extreme global crisis, but nothing happened. Now we have the open hostilities in Ukraine, the whole stock market under stress, unprecedented financial repression to discipline, Russia, and gold has hardly moved. We have raging inflation across all the advanced nations. The largest nations have so much debt that they are avoiding increasing interest rates too much because their interest bill would go up. But still, gold doesn't go up. Is gold done as the asset of last resort? Now, Carl does go into a bit more depth. So I just think if we're looking at the gold situation and some of the trials and tribulations of being a gold investor there, John, what do you think gold's role is in this scenario where we are at the moment, where there is so much uncertainty and it's gone up a fair bit, but it's not blowing the lights out?
Well, keep in mind that the traditional way in which gold protects you in a situation in which inflation is spiking like mad, and you can't compensate for that spike in inflation by receiving a higher rate of interest on cash deposits because interest rates are so low. I mean, gold, what it does, what it's supposed to be doing. I mean, it preserves your purchasing power. So rather than sitting in cash, you sit in gold. Rather than sitting in bonds, you sit in gold. And if the stock market suffers, which it frequently does when you get into stagflationary environments, in fact, it pretty much always does, gold helps to protect your wealth, but it protects it against both a declining stock market and inflation at the same time. And so gold has that traditional role to play, regardless of what specifically is going on in the world, what specifically is causing those various things to happen. When it gets really ugly, though, like this, sanctions, trade restrictions, capital controls, perhaps, gold plays a very, very different role because it still allows trade to happen at all, even when big, big barriers are being placed in the way of that trade. I've read a couple articles over the past week that there are apparently discussions taking place between Russia and multiple of their trading partners that a simple way to get around sanctions that are imposed and enforced through basically the US's ability to police the use of the US dollar, a simple way around that, of course, is to try and transact in local currencies bilaterally. However, another way that has been explicitly mentioned is to use gold instead. Gold is a truly international currency in that regard. And Russia's gold reserves are held at home, and China's gold reserves are held at home. There are some countries that hold them in London, some countries hold them in New York, but in the cases of Russia and China, gold reserves are held overwhelmingly at home. And if they choose to use their gold balances as a way to settle international trade, it's not a particularly difficult thing to do. Now, it may be a bit more cumbersome than the way they've been doing it, but if it allows you to get around sanctions, it at least allows you to still trade. So anyway, that's when gold really gets into demand because the whole demand function for gold shifts when it becomes the only currency you're able to use for any meaningful portion of international trade. The demand function shifts, but the supply function for gold can't shift because the supply is fixed. And you can have huge nonlinear spikes in price if you get a shift in the demand function for gold for this or for any other reason, but this is the one that's currently in play. So the traditional, investors need to have some gold, that demand curve may not move a whole lot. But if you need gold just to trade with a key trading partner, that can have a huge shifting impact on the demand curve, sending the clearing market price of gold much, much higher.
Quite. I do get a comment here from Lisa who says it's great having gold. What about heating bills, water and food? When you cannot afford to eat, you cannot eat gold. Something that I believe Napoleon's troops discovered on their retreat from Russia, where they had looted all of these enormous gold crucifixes. And of course, they would trade all of that gold just for a potato because they were absolutely starving. Indeed, Lisa. I mean, gold. We're speaking of it as a investment holding, as portfolio insurance, or something more of a speculation. But when it comes to things like food, and we have already been discussing energy, there was an article that I'd like to bring up. And this was just regarding it was looking at the wheat prices, I think. It's due to both Russia and Ukraine's dominance when it comes to being the breadbasket of Eastern Europe. And this was, if we're just looking at Russia, not exporting its food to the rest of the world, and indeed from not exporting to the rest of the world, and from Ukraine not exporting fertilizer to the rest of the world, there could be huge issues with the rest of the world actually having food, getting access to food. And I do fear that we're going to see big food shortages in some of the emerging countries in the world as a result of this embargo, or this, well, it's not really an embargo, but just the lack of supply there, John. What's your take on that? Because I think this is something that's not really getting into the news very much so far, but I think it could become a very persistent trend.
This is a global issue, right? Food is a global product. Basic staple food products move all over the world. And yes, a lot of things are produced and consumed at home, but a lot of stuff is exported and shipped around the world. And there are many, many emerging markets, as you say, which are food importers. I mean, we have this bias in the developed world to always assume that an emerging market, almost by definition, is a food exporter. That is not true. In fact, I think Egypt is perhaps one of the largest food importers per capita in the world, which might surprise a lot of people. And yet, I'm pretty sure that's the case. And there are other countries that are not wealthy at all that are major importers of food. And you're seeing, again, price rises now, which will be absolutely devastating to any economy where a substantial portion of the population still lives at or near subsistence level. And that will have almost immediate political repercussions in those countries. So while we in the relatively developed parts of the world, we might absolutely notice our incomes being squeezed for sure, that feeling is going to be a hell of a lot more acute in certain other places. Now, if those places become politically destabilized, does that unlock the potential for other conflicts? It probably does. This thing could escalate indirectly in all manner of ways as the economic shockwaves and supply shockwaves ripple through basically the bulk of the global economy that will be affected in at least some way by what's going on. And again, I stress this point. It's not just the Ukraine conflict. We were already suffering under the lingering impact of all the COVID lockdowns that had yet to be worked off. And this is hitting us right at the same time. And I don't think people generally appreciate how those two factors could serve to reinforce each other non-linearly and lead to huge, as you say, potentially huge food shortages in many parts of the world.
Yeah, I think it was an article from the Financial Times. I think it was, yes, indeed. Food crisis looms as Ukrainian wheat shipments grind to a halt. Prices soar as Black Sea ports at a virtual standstill amid the Russian assault. This is something I mean, we're talking about biological and chemical weapons earlier. The risk of famines as a result of all this is something that I don't think many people are worrying about, but I think they should be. Moving on slightly, we do get a comment here from Pete, who says, if the West kitted the Ukrainian army with Polish MiGs and ordnance, truck-mounted phalanx and Iron Dome, the war would be ended within days. Well, Pete, I mean, you're welcome to bring that to NATO, but good luck getting the Israelis to hand over Iron Dome. I don't think that's something they'd be wanting to bring to Ukraine, though maybe we'll be proved incorrect, and Israel will be a good negotiator between Ukraine and Russia, as Putin does consider Israel to be a Russian-speaking country, or part of the Russosphere, as it were. There was another question that I received, actually. This was regarding our last episode of Southbank Live, which I would like to address in this episode. And this was sent through. I don't think they left a name, sadly, but it was just a comment saying, I watched the recording of the interview between Boaz, Shoshan and John Butler last evening. Whilst a good deal of the economic forecasting made sense, I was increasingly disenchanted with the overall assessment of what was going on in Ukraine, its nature and implications. In particular, Boaz Shoshan's concerns that people were likening the work of Putin to that of Hitler. Viewing the increasingly heartrending pictures and reports of what's happening in that sovereign country and its killed and displaced inhabitants, I wonder who Shoshan would prefer Putin compared to, St. Nicholas or Attila the Hun. I'm admittedly not an expert on history, but perhaps we can find a parallel somewhere. Now, just to clarify, what happened in the last episode was somebody in the chat said that Putin is the new Hitler. He's just got nukes, and I said this is rather unhelpful because, well, number one, you're just making a comparison to Hitler, as so many people do, and I thought it was very ironic, given the fact that the Ukrainians do have a formal neo-Nazi regiment, the Azov Battalion. So just this week, in fact, there were a couple of images, one indeed from the NATO Twitter account celebrating International Women's Day, in which they took a look at some of the female Ukrainian soldiers. And one of the images that they indeed share has a lady in full combat webbing and fatigues, and she's wearing a Sonnenrad on her chest. This is a symbol that was adopted by the Waffen-SS. It was a favorite of Heinrich Himmler. And whoever was running the Twitter NATO account didn't seem to recognize this. And there was another from Getty Image where another soldier was wearing Sonnenrad. And people don't really seem to. Obviously don't want to engage it because everyone is supporting Ukraine, so they want to overlook the fact that there is definitely a sort of neo-Nazi element of the military. But that's kind of getting aside the point. I said it was unhelpful for folks to be comparing Putin to Hitler, just because so many people say this person is a bad person, therefore they are Hitler. If the reader is saying, well, if you invade a country and you cause civilian casualties and civilian displacement, therefore you are Hitler, I think you would find an awful lot of leaders, and some of them quite a lot closer to home, actually, who would qualify as being Hitler in that regard. But indeed, we are getting slightly more into the politics, which is not the point of this show. But as they had written down, I thought it would be good to address it somewhat. One thing that we do also get in the chat. This is regarding the shift, as it were, of capital from equities into commodities. We do get a question here saying, will this not be very bad for Western businesses if we do get a big flow of cash going from the equity sector, the richly valued stock market, into commodities in the West? And I guess to answer this question, it depends where you are in the West and what business that you're in. Because, of course, here in the UK, we've got plenty of big commodity producers in the FTSE 100. John, what would be your thoughts on that? Because if we are entering a new epoch, which are dominated by commodities, it does feel like there will be a big shift out from all of the tech stocks and all of the great titans of the last 10 years.
Well, look, I mean, look, I fully agree with that. The whole idea of what I mentioned earlier, that is investing low on the value chain, means getting yourself more invested in the raw economic input and the early stage processing thereof, and farther away from the high up the value chain economic output, especially that which is intangible, related to the value of your brand, related to the latest consumer trend or whatever it is, and growth expectations and assumptions that are extrapolated from that. And so we already had a situation, even during COVID, and certainly before this conflict, when tech was hugely overvalued relative to basic industries by any reasonable comparison, in my opinion. And then the only way you could basically justify tech valuations where they were was by looking at their intangible value, their IP, right? Their brand recognition, things like this. And I used one stock, beginning with a T, as the prime example of that. And so you could make a very, in my opinion, very persuasive investment case, even before all hell broke loose in Ukraine. That you wanted to be underweight tech and overweight basic industries in various forms. And this has only bolstered the case. And I certainly, I mean, who wants to be, seen to have been ahead of the curve because a war broke out, bolstering their investment case? I mean, I don't take any credit for that. But certainly what's happening does make the case stronger, that you want to be low on the value chain. And you do want to avoid, again, tech is the poster child for intangibles, but there are some other industries where intangibles are also pretty high. Take pharmaceuticals and healthcare, for example. There's a lot of intangible value there, which I think is in trouble coming into a post-COVID world where not only are intangibles derating generally, but you have maybe some specific concerns about how big pharma handled itself during COVID. And whether it seems that maybe they have almost too much influence on the health sector, and that they need to perhaps be more heavily regulated, or what, more supervision of some kind, whatever it is, and that could be a problem for them going forward. But the basic takeaway, that you want to get close to that raw economic input for now, as a defensive approach to a stagflationary world where supply issues are just not going to go away quickly. That to me is very solid. Very, very solid.
There's a question here from Colin relating to Russia's foreign exchange reserves and how they've been frozen. Will the sequestration of Russia's forex reserves prompt other central banks around the world to increase their holdings in counterparty-free gold bullion? Which I think is a very good observation. When we're talking about Putin's wargaming earlier, it feels like something that the Russians must have overlooked, in that so much of their foreign exchange reserves were so easily locked down. Or am I reading that wrong, John?
Well, in a way, they are. The nature of the modern financial system is that foreign exchange reserves really, they can be immobilized essentially by the issuing central bank and government. They really can be. And exactly how it happens, it almost doesn't matter what the mechanics are. I mean, the US could pass a law tomorrow making it illegal to pay coupons on any treasury securities held by any Russian entities, for example. They could also say that it's illegal to accept treasuries in exchange for payment coming from any Russian entity. So, in a way, foreign exchange reserves were always subject to these sorts of actions. It's just that they generally haven't been, with
Yeah.
a few exceptions: North Korea, Iran, things like this that have been essentially completely shut out for years. But when it comes to when it comes to a general action like this, it is kind of an escalation of what can be done. But in theory, the ability to do it was already there. With gold, that is simply not the case. And back to my point earlier, gold is ideal as an international money that simply cannot be directly interfered with as a basis for trade between two consenting countries. There's nothing about the financial system that needs to get directly involved in that. They can get together, they can each have a pad of paper and a pen, and they can record a ledger of who's passing how many ounces to whom at any given time. It can exist entirely outside the modern financial system. Now, again, that's cumbersome. There's some friction in that, but it's doable. And when you get shut out of the existing system, well, you have to look for alternatives. I think it's absolutely a key takeaway lesson here that no government, at least no major government, is going to fail to learn that if you want absolute maximum flexibility in time of crisis, you want some gold, and you want enough gold to provide for at least a few months of import cover. Now, that's an important term when it comes to evaluating the credit status, the credit worthiness of countries. You take a look at their foreign exchange reserves and you see how many months of imports they could cover in the event of a crisis. Well, hell, if you can't even access your foreign exchange reserves in the event of a crisis, how in the hell are you going to pay for imports? Guess what? Use gold. So gold import cover is perhaps a new metric to be looking at. Countries might think, I should have at least 2 or 3 months worth of import cover in my gold reserves going forward. And then again, if that thinking begins to take hold, it could lead to a huge shift in the demand function for gold. And that will lead potentially to a surge in the gold price.
Indeed, very eloquently put as ever, John. We are getting along a little bit for time, and I'm afraid we're not going to be able to answer all of the questions that we have got in the chat. There has been a very lively chat indeed. Dan, a young student, is enjoying the show. Thank you very much for your comment, Dan. That's very, very kind. And Andy says, guys, the range, depth, and understanding in your discussions on the economics, finance, and politics of the situation and possible outcomes is truly impressive and greatly appreciated. Very high praise indeed, Andy. I'm great to hear that you are enjoying the show. John, outside of what we've discussed already, we do normally have our long-short segment. Is there anything really short that you could rattle off just at the end of this episode?
Well, I mean, I need to apologize in a way because I basically said that I felt that Russian stocks were a buy. But the problem is that you can't buy them now, even if you want to. And of course, that's something I probably should have thought through in the sense that, why recommend something that people can't even buy now? So my long would still be to try to get some sort of exposure to Russia, to this conflict being settled before too much longer, people going to the negotiating table, sanctions being eased, or at least expectations that sanctions will eventually be eased. But it's difficult to get exposure to Russia if you're not even allowed to buy the Russian stock market. So that's problematic for many people. So I guess that the next best thing you can do, try to buy what you can buy that is at least linked in some way. And that could be, for example, some of Russia's key trading partners. Maybe have a look at their stock market. So, for example, can you still buy Kazakhstan? Can you still buy Belarus? Probably not in Belarus's case because they're so tight with. But it's possible there are a couple peripheral markets with big Russian trade ties that might be ways to get that sort of exposure. So that's something I'm going to be looking into. So I would still want to be trying to get long Russia, but it's hard to do so directly now, if not impossible.
Right. And for your short for the week, do you have anything in particular lined up?
I would still just be short big tech, like I said before. I'd be short all the. To be fair, I would be short all the really IP / intangible heavy industries. But big tech is really the poster child. I think it has a lot further to fall. And so this to me is just the beginning of what is, I think, going to be a historical correction of a historic bubble in the relative overvaluation of tech versus the relative undervaluation, not only of basic industries, but also consumer non-discretionary, public utilities, and a couple other areas which in traditional valuation metric terms aren't looking particularly expensive. I mean, they're I'm not saying they look cheap versus history, but they don't look particularly expensive versus history. Unlike a lot of these IP heavy, intangible heavy industries that collectively have the highest valuation, or going into this anyway, collectively had the highest valuation vis-a-vis the broader stock market that they had ever had. And so, is it the same as NASDAQ 2000? It's actually bigger when you look at the breadth of it. The breadth of this bubble is actually bigger. The narrow spike of huge overvaluation may not be as high, but the overall breadth of it is higher. And so, to put on a mathematics hat, if you're solving for the area under a curve, you use calculus, right? And this area of bubble area that I see out there is bigger in the aggregate than the narrow spikes that were seen in the early 2000s, for example, or going into the early 2000s, I mean.
Right. Though, yeah, the dot-com boom, dot-com bubble, we did see that a fair bit during the lockdowns, though. It's kind of, you don't see people discussing it quite so much at the minute, as of course, not just with the Russia situation, but even before the invasion, there was less. I thought there was less focus so much on the tech side, but that was just looking, reading through the press. Now, John, we have gone a little bit over time this week, and indeed we won't be able to deal with and answer all of the comments and questions in the chat. But that was very stimulating as ever. There is so much to talk about. I'm sure we could just carry on for another 2 hours if we really had the time for it. Sadly, we do not. But we shall be back next week. Of course, for episode 36 of Southbank Live. Thank you to all who have tuned in. It is such incredible is the wrong word to use, but it is a very, very volatile time. That quote from Lenin about there are years when nothing happens and then there are weeks where decades happen. It's getting spammed all over the place by journalists, but it is actually true. And as an investor, it's certainly something that, you need to be taking a very close look at what is going on. That's all for this week, folks. We shall be back next week. Thank you to all who have tuned in live, and thank you to all who are watching a recording of this. We'll be back next time, and I hope we can delve even deeper into some of the topics we've explored tonight. But that's all for now. Bye-bye.